Hey all, welcome at this video. In this video, we're going to discuss how the AI revolution is reshaping the financial markets. We can see it every day, again and again, the influence that all the technological developments and also like the market developments caused by the AI revolution is having on the financial markets. This week, in this video, we're going to discuss all the updates, the most relevant developments and updates on this aspect. If you like this topic, like the video and subscribe to the channel. So let's go. This is the overview this week. We're going to discuss many things. For example, we're going to take a look at the TSMC earnings. We're going to take a look at the rate of adoption. We're going to also discuss robotaxis as well extensively, and also like the new browser that got launched by OpenAI. Many things. So keep watching. First of all, let's start with this published article by Citigroup, right? They launched this article on the website October 16, where they try to answer, in their opinion, if the current AI bubble that we're in, if the current market we're in, is it an AI bubble? Well, according to them, no. Their key takeaways are, yes, there's a lot of investment or capital expenditures, right, which are investment. But they say it's self-funded. Like these companies make a lot of profit and they're investing in it, and it's not driven by borrowed money, by leverage, right? So this is like a something that lowers the risk. Because if in case it goes wrong, in case the investments in AI doesn't lead to something, it was just profit that is gone and there's no debt or something. Well, yes, the S&P valuations are getting higher and higher and higher, but it's not based on promise for the future. No, there's record profits actually backing the valuations. So yes, the valuation S&P 500 going up and up and up, right? Because the major players they're getting more valuable, but there are also profits backing it up. At the same time, yes, there are a lot of unprofitable tech names. For example, the OKLO and the quantum computing names, we're going to discuss it in a bit. They remain vulnerable, right? Because they're not making profit yet. They're not making, sometimes they don't even have a product yet. They don't have revenue yet, but still the valuation gets up and up. Yes, they're vulnerable. And I agree also with it. The Q3 earnings season, where we're currently in, now we're reporting the earnings for Q3. They're very critical, right? If there's like something changing, that could be a risk. But so far, so good, right? We're in the middle of the earnings season, and so far, so good. So let's go ahead. The next topic. We see the speculative names like the OKLO, the IONQ, RGTI. They have been pulling back a little bit, right? And this is normal. Price of stocks moving up and down, it's not an anomaly. It's something normal. If you're investing, you want to keep an eye on the fundamentals of the company. Are they growing? How's the profit doing? How are the margins doing? What do you expect of the market? Right? If the total addressable market is growing, the market where the company is active in. The price moving up and down, it's simply you could also better see it as an opportunity. But these are the speculative names like OKLO and the INQ. They don't have often revenue, they don't have profit, and they sometimes don't have a profit yet in case of OKLO. So it's very risky, and I'm also not invested in it. But then for sure you can expect this high volatility, and I definitely think like these companies were way overvalued. And also I told in the community where I'm active in, and also to my students this week and last week, if you were in these names, the ION quantum names or OKLO, and you were in there, better to sell it all, be very happy, do a little dance, be happy that you took the profit, and then just go on, because the valuations really came into bubble territory. Also with NBIS. Actually, NBIS, Nebius is an AI cloud computing provider. I'm invested in it. They also made a relative significant pullback from 140 to 100 after it actually moves up in April from around $20 all the way to more or less 140. So a pullback is very healthy. But my vision is that it can become a 100 billion company in a couple of years, right? But there's also risk that it could go wrong, because it's still, they don't earn another profitable company yet, and there's chance that they never become profitable company. But I think there's a higher probability, and the risk to reward is good, because if they become $100 billion company, it's like 4 times from now. I see the market growing. I see like the management is good. I think the product is good. So I see good risk to reward, and I see a higher probability of it working, but I'm aware of the risk. So let's go ahead to the next topic, because this is the news that came out yesterday evening. US administration looking to take a stake in the quantum computing, right? In the IonQ, RGTI, D-Wave, quantum computing, etc. This is part of a broader strategy to invest in critical technology, right? The idea is, okay, they're gonna invest $10 million and then they get like an equity stake and influence in return. They're engaged in discussions, but there's no deal yet. What is the reason? Well, first of all, cybersecurity implications, right? Quantum computing, it's a technology so strong that a lot of cybersecurity and a lot of coding, for example, also like in crypto, a lot of passwords will be simply be cracked in an instant because the computing power is extremely, extremely strong. There's of course, the economic competition with China, right? Because we already see like the US administration is preparing for a technology war, technology revolution. The main competitors in the world will be China and United States. And US administration, who is currently ahead with the technology, wants to maintain the competitive advantage, right? And they also want to do it by getting more influence in the quantum computing industry. There's also the military applications to have like a military advantage, and it could lead to more scientific breakthroughs, and it could be good to be ahead of there. So that's the reason why the US administration is doing it. We already see like a pattern of taking equity stakes this year, right? There's like a 15% equity stake in the MP Materials, in the 10% stake in the Intel early this year, in Lithium Americas, 5% stake. So it's part of something bigger, and I'm sure we're going to see more of this reporting in the upcoming months. So it's definitely something we're going to discuss in this channel a lot as well. Let's take a look at the next topic, the Reddit retail investor phenomenon, right? We saw like all the buying in GameStop last year, in AMC, etc. And let's discuss that a little bit, what we're seeing happening there. This image is an image created by AI. I asked AI, a model, can you create me a picture that would reflect to you the Reddit retail investor phenomena? And I think it's a little bit of a chaotic picture. But the AI revolution, in my opinion, is about an increasing productivity, right? It's going to increase the productivity from not only workers, but also from applications. And I think we should be part of it. If we're not part of it, the revolution will be stay behind, and our colleagues or neighbors, etc., and everything else will develop their productivity, but we stay behind, and that's not, of course, a good thing, right? Learning, productivity is also like something compounding. The more you learn, the faster you can learn, right? So my advice would be to immerse yourself with all developments on the AI. Just practice and play with it, and that's this example of this picture. What do we see on Reddit? Right, the biggest forum, and it's like they call it like the democratization of investment, right? Because it's like big forum where everybody coming together and they're doing sometimes some weird, very weird things, right? Like all buying together. It's very interesting. Not really a topic of this video, but we'll discuss it in the future. So what do we see in Reddit, right? For the AI cloud provider Nebius that we discussed earlier, we see some meme stock behavior where there's like an extreme amount of enthusiasm, right? People speak about this free money. If you buy now, then for sure you will make profit. Just put all your savings in there, right? Easy prediction of 10 or 10 times returns within 1 to 5 years. And any criticism is straight away called FUD. And this is a bad sign. As soon as everybody is being very bullish, then you're often too late, right? And this is something that I noted clearly on Reddit. I mean, it doesn't have to be too late. And of course, like I'm also investing, but I'm investing for the long run. But this is something clearly that we have seen, and it's very, very interesting. And I'm invested, but I'm aware of the risk, right? There are definitely a few risks in EBS, but still, as mentioned earlier, I think the risk to reward is great, and I think the probabilities are also higher, right? We got a very fast growing market, they got a very clear product, they got the backing, they got the management, they already get like their fundament of the company. So I think the risk to reward and the probability is great. But there are definitely some risk, right? There's like they won't be profitable for some time, the stock is already priced in for significant growth, etc. Let's go ahead to TSMC. TSMC is the company, is the manufacturer of AI chips, right? Companies like AMD and NVIDIA, they don't manufacture the chips, they're designing chips. And then subsequently, they had other company, mainly TSMC, manufacture the chips, right? And the machines to manufacture the chips are made by a Dutch company called ASML. So ASML and TSMC are really the backbone of the AI revolution. TSMC is a crucial manufacturer of AI chips. They're Taiwanese. Main companies are in Taiwan, but currently they are expanding the factories and very, very welcomed by Germany, Japan, and they're building a big factory in Arizona, right? And these countries are very, very happy that they're going to be the manufacturing of critical technology in their countries. And TSMC is a very interesting, very powerful, very efficient company. And I definitely recommend you to watch a few documentaries or try to study the company because they're very innovative and they're looking to make their production and supply chain all the time more effective. So they reported earnings for the quarter three, right? What did they say? Well, here you can see, by the way, a transcription of the earnings call, right? We discussed AI revolution, gonna make things very productive, but now you can also, if there's, for example, an earnings call, a press conference, you can see the whole text, and you can also even ask AI for questions. What got said about this topic? What got said about this topic, right? You don't need to watch the whole press conference for 1 hour. You can just read the text very quickly and even ask AI questions. But what did they say? Among different things, we continue to observe robust AI-related demand throughout 2025, while the non-AI and market segment has patterned out and is seeing a mild recovery, right? So there's people in the market who think, well, yes, we're investing a lot in AI this year, but then next year and the year afterwards, it's going to come down, the investments, and the stock market will get a big hit. But actually, the big players, and also like many of the analysts, and including me, we think that the investments in AI and the data centers will only increase and increase, right? And that's also what TSMC, the insider, who has inside information, says it. They also say the explosive growth in token volume demonstrates increasing consumer AI model adoption, which means more and more computation is needed, leading to more leading edge silicon demand, right? The idea is if the AI model is getting better, they're going to be more, they need more compute. If the AI model is getting better, there's going to be more usage. If there's more usage, there's going to be more compute needed. If there's more usage, there's going to be more applications, right? If there's more applications, there's going to be more users. There's going to be more users, there's going to be more compute needed, right? So it's really like a flywheel moving up, the demand for compute. And that's also what they say, right? They say the CAGR, which is like the compounded annually growth rate. So the amount it grows each year on top of what already has been growing the year before. We previously announced is mid 40%, but it's still a little bit better than it. So they already had like high expectations every year, like it grows 40%, and then again 40%, and then again 40%. But they say it's actually better than that, the recent update. And here we see like the key takeaway, like some quick summary. This chart of TSMC is already like a huge move up from April until now, and we see like a little bit of volatility increasing, right? We see the size of the candles on this daily chart. Each candle represents a day. See the size of the candle becoming a little bit bigger, increasing volatility, but we see like a huge move already, and there's perhaps some profit taking, or of course you cannot move endlessly up, right? So the market probably also expect this earnings, and therefore we're seeing this price action. So let's go ahead to the next part, the rate of adoption. In this chart, you can see like in the dark blue line, the rate of adoption of the internet. And in the light blue line, you can see the rate of adoption of ChatGPT. You can really see that in 2.5 years, because the first commercial product in AI, ChatGPT, came only out 2.5 years ago. We see like they went from no time to almost 800 million users, or 1 billion users almost in 2.5 years, way faster than the internet revolution, right? So the rate of adoption is really unprecedented. At the same time, the Deutsche Bank came out with a report October 14 that the growth rate, the blue line here is the growth rate of monetization of consumer spending in Europe and ChatGPT is going down a little bit. First of all, I think it's interesting, right? In the blue boxes here, it's like August. It's like the student month, it's like the holiday month for students. There we see the growth rate being the lowest. So you can see like that many students are using the paid version of ChatGPT. So the growth rate is going down a little bit. And that caused some uncertainty, right? Because like the markets are very, very emotional in the short run. But I think there's nothing to worry about, because what these companies do, they first make everybody addicted to the product, right? That everybody starts to see the advantage of the product, and then they start to focus more on monetization. And they start, okay, this you can get for free, but then you need to pay for it, right? And they're very, very smart people there. With a lot of experience, of course, and they hire only the best people. So I wouldn't worry about it, right? And if you see like this adoption rate is also not going to decline anytime soon, right? So no worries, it's going to keep on growing, and also the monetization is not an issue. So for me, this is nothing. There's no news that cause me any kind of change in my vision in the future. Yes, still the next 2 years will be crucial, right? Next 2 years will give more clarity. But of course, when everything is clear, you're also already too late with your investing in the stock market, right? Because you need to be earlier than other people. But anyway, the next 2 years will give more clarity, right? And just think, what grew from almost nothing to almost 1 billion users in no time? Let's continue. Google CEO Sundar Pichai got interviewed by the Salesforce CEO Mark Benioff. Mark Benioff is a very extroverted, bombastic CEO, and he interviewed the Google CEO in the Salesforce annual tech conference. Right, Salesforce is like a major CRM. They have CRM software, a very big player. Right, and they have the annual tech conference, and they interviewed the Google CEO. And in the description below, you can find a link to the interview. It's very, very interesting. What are the main points? Yes, Google is since already 2017 a company first focused on AI. They're also a full stack company, right? They're trying to do everything in AI, from developing their own chips to developing their own models and having their own products, right? So it's really a main AI innovator. Also the first who developed like the speech recognition. They had like, of course, the breakthrough moment in 2017 where they beat the world champion in Go, AlphaGo, the Asian computer game, through AI modeling. And they're a very big AI innovator. And I think actually Google is also a great investment, but we'll come back later to the topic in other videos. The CEO also mentioned that they were ready to launch a similar program around the ChatGPT launch. But the thing is, like, Google's already like a lot of expectations, right? So if they launch a product, everything needs to be perfect. And that's also the difference, right? Like a newer company like OpenAI, they can launch something and then they have more freedom to pivot, while Google has to like deliver something really according to the highest standards, right? So that's what he mentioned. They also mentioned something very important, that quantum computers will be working in 10 years, right? Quantum computers will be so much more quicker than the GPU chips and other chips. He's convinced, very bullish, that it will be working in 10 years. So you can imagine all the breakthrough moments and all the breakthroughs that we're going to see. So you want to be part of the AI revolution, and especially how it's reshaping. You want to be up to date on how it's reshaping the financial markets. So if you like this video, please subscribe to this channel. We also mentioned that starting next year, the models are going to provide intelligent agents where you can really give it complex assignments with multiple steps, and it will do it for you. There's also this news of the quantum computing chip yesterday. The same CEO, Sundar Pichai, and also Google AI, they announced a breakthrough on the quantum computing chip, and this is actually how the quantum computing chip looks like. And you can really see that Google is a big innovator in this space. Let's talk robotaxis. And nowadays you have to be careful what you say, right? It's we're getting to an age where like some people are a little bit sensitive, and you also see it actually like here in this space. There's like really the fanboys from Tesla, and sometimes they are not too happy with criticism on the Tesla robotaxi, other Tesla products, right? So it's going to be an interesting discussion, and I'm really curious to see what you think about it, and please post it in the comments below, right? So we're going to discuss robotaxi development and the expectations for the future. Main players are Google, Waymo, right? Waymo, they already have like autonomous taxi driving around, and they're part of Google. Then there's also Tesla with the robotaxi, and of course Uber is also innovating in this, the biggest player on ride sharing. They're also trying to continue in it. Let's start with Waymo, right? Waymo is coming to Europe. They're currently in the United States, but they're coming to London in 2026. Very, very interesting. So the first autonomous robotaxis will be driving around in Europe, in London next year. This is the expectation, came out this week from Bloomberg. The expected rides per week in 2030, right? So we're going from this year from expected 80 million rides to more or less 7 million rides per week, right? Now we got 18 billion per month. Sorry, 80 million rides in 2025. We're going to 8 million rides per week in 2030, right? It's like a 99% CAGR, right? The growth over the growth, right? Each year. So that's, of course, going to be very fast, right? This is like the more or less, according to the table, what we can expect. This year, 18 million rides, and then you go from 2028 to 152 million rides, and 2030, 375 million rides. Do you think it's too conservative or not? Let's take a look what other players say, right? Wells Fargo, they expected that Waymo will go from 18 million to 465 million in 2030, so more or less the same. They expect that Waymo will have a 10% market share in 5 years, in 2030. What did Goldman Sachs said? They reported on expectations for the market in general in 2030, that the ride-sharing US market will grow from 58 billion to 336 billion, right? So part of investing is that you understand, like, that you focus on like how much is the market actually going to grow. the market for the ride sharing is going to grow from 58 billion to 336 billion, and 90% CAGR. It's just really, really big, right? Because the idea is also at a certain point, ride sharing, like the Uber app, or like if there's like the Tesla robotaxi, the Waymo taxi, is going to be like cheaper and cheaper, that people don't need their own car anymore, right? Because perhaps it's going to be more cheap to just use these ride sharing taxis, and that might be in the end be cheaper, right? So it's a really fast growing market. They expect robotaxi is going to take 8% of the total ride sharing bookings. And they expect 35,000 commercial autonomous vehicles in the US. But they expect Waymo is going to be the dominant player. Here you see like the same thing visualized. Let's take a look at Uber. Yes, so Uber is threatened by a 10% market share erosion, but it's still a dominant player, right? So it's not only now currently dominant player, it's going to be the biggest dominant player in 2030 in a market that is going to increase 90% CAGR until 2030. So I'm investing in Uber for various reasons, many reasons, because not only this, many reasons. And the earnings are expected November 4, 2025. So let's take a look at a few financial data, right? Let's take a look at the PE ratio, which is like a ratio to evaluate the company. Currently, Uber, it's a company that's very fastly growing in all aspects. They're very profitable in a very fast growing market, but the PE ratio actually pretty low. Like the trailing 10 months is like PE ratio 60.6, and the forward next 10 months is only 31, which is a relative low valuation for a fast growing growth company. The reason is that the market is hesitant because they're uncertain like what's going to happen with these robot taxis. Is Uber going to get disrupted, right? But as we discussed, actually the market is going to grow a lot, and Uber is expected to still remain a dominant player in 5 years. So I think Uber is very, very undervalued, but we're going to discuss it in next upcoming videos as well. Here we see the Uber chart. Uber chart also looks pretty strong, right? Here you see like the daily chart is 2024. You see like here the range. Here we see the breakout. We see the second range this year forming on top of the first range. We're seeing the higher lows. We see like the last 2 weeks a little bit of a down mode, but that's also part of the uncertainty again between the tariff war between China and US. But I'm very, very bullish on Uber. See another chart. So now let's go ahead, right? Let's take a look at the comparison between Waymo and the Tesla robotaxi. And this is a very sensitive topic, so please share in the comment what you think. I asked AI to generate an image about the confrontation between Waymo and Tesla. And it gave this a little bit of a lame, ugly picture. But yes, that's the picture that AI gave me, right? We all the time need to try to apply AI whatever we do. My recommendation, let's take a look at Waymo. What is the current status? They're currently operating in 5 major US cities. Fully autonomous service, so no safety driver. Phoenix, San Francisco, Los Angeles, Austin, Atlanta. Okay. They already have over 10 million paid rides and expected to finish with 80 million rides this year, completely with 100 plus million autonomous driven miles. Approximately 2,000 vehicles. So what are the expansion plans? Well, they go to London, they go to Nashville, Miami, Washington, Denver, right? And now they're working a lot with Uber, as you can see. All right, they're cooperating with Uber, but they also go to other ride-sharing apps like Lyft, etc. So they really have like a product, they're expanding fast, and it's already working. Now let's take a look at Tesla. Well, the current status is they have like a limited pilot program, right? So they're practicing, and they have all the cars, the robotaxi, they have like a safety driver. Somebody's inside the car to check, to interrupt the robotaxi if something bad happening, something unsafe happening. So they have a very limited pilot program with safety driver, and they're currently operating in 2 cities, Austin and San Francisco. Well, they only have 10-20 Model Y vehicles riding around, and it's invite only with human safety monitors. It's not open for the general public. Well, the open access was targeted for September 2025, but meanwhile we're in October and it's not there yet, right? So let's take a look at my conclusion between Waymo and Tesla. My conclusion, Waymo is the winner. To be fair, Tesla is not even a player yet. Waymo was 5 to 7 years ago where Tesla is now. At the same time, Tesla has a vision that might scale faster, right? Because the idea is, for example, that everyone who has a Tesla can, if he doesn't drive a Tesla, can add Tesla to the robotaxi program, so your Tesla can use to generate money to drive people around, right? And also the technology from Tesla might be a little bit more cheaper. So yes, Tesla has a vision that might scale up faster. But so far, the expectations are that Waymo is there yet already, and Tesla isn't yet. So let's go ahead to the next part. OpenAI launched a browser, Atlas, to fight the dominance of Google Chrome. Right, that was happening this week. It caused the Google stock to drop a little bit intraday. However, I don't think it's going to be a threat for Google Chrome, at least not on the short term, right? Google Chrome has been rapidly increasing AI updates, and most things Atlas can do, Chrome can already do, right? I think there are going to be more difficulties for OpenAI to take market share in the browser space than in the LLM, the large language models, right? ChatGPT. ChatGPT took a very quick market share. ChatGPT is the product of OpenAI, but I think Atlas is going to be in the browser, it's going to be more difficult. Last topic, Amazon. There were leaked documents this week where they announced, at least like that got discussed, the plans to replace 600,000 workers by robots by 2033. Right? Amazon works with a lot of jobs that are low in cognition, right? Not a lot of cognition is needed, right? Because it's then a lot of production, like a lot of tasks. Robots can take it over. And you can imagine like the increase in margins, the increase in productivity, right? Because robots, if there's more robots, they'll be able to work longer. There will be less cost in the long run. So you can imagine like how much the market is going to increase in Amazon. That's the news that came out. And also we saw like when it came out, August 22nd, or 21st, like the stock market went up. So I hope you enjoyed this video. We have taken a look at the AI developments and how the AI revolution is reshaping the financial market this week. I'm going to post every couple of days and at least every week an update. If you like this video, please give the video a thumbs up and subscribe to my channel. Have a great day.